how you find shorting opportunities in a market that's grinding ever higher.
Well, it's tough. I mean, that's been the toughest part about managing a long short fund in the recent environment. We're out there looking for companies that have come too far, too fast, for companies that are mis-executing, changing their business model in a way that we don't think is going to work in the long term. Or just companies that are where the industry's trends are passing them by.
Glenn, your most recent letter to investors talked about the silliness and the comical nature of WeWork's community-adjusted EBITDA and the eyeballs metric of $19.99. What are the silly metrics you're seeing out there right now?
Well, I prefer not to get too specific on that. We try to keep in the background with our shorting. But look, we're seeing companies out there that are pushing the envelope on recognizing of revenue and sometimes with the blessing, frankly, of GAAP and the SEC, and that's always surprising, to see that. But there are examples of those things happening, and I think as a lot of industries come online, the bankers, the accountants, they don't really know how to handle some of that accounting. Mm-hmm. And we find some of those situations. We're also looking at shorts that are in industries that are perceived not to be mm-hmm. very competitive, but are very competitive and getting more so. An example would be in the online gambling industry. There's been a lot of excess there. Mm-hmm. And, we've studied that industry for a decade in Europe. And it's a difficult industry to excel in, and it's hard to really generate a unique business there.
Glenn, let's talk about some of the more traditional names. We've seen the FANGs grind higher. You're in Amazon, for example. What should Amazon be worth?
Yeah. Well, Amazon's an amazing company, and I think really if we have 0 FANGs in our top 10 right now in our hedge fund. We have a long-only fund where Amazon is in the bottom half of the top 10. We've been able to outperform on the long side of our book, not being overly exposed to the FANGs. That said, I don't think it's a bad place to invest. I think your general equity investor, consumer, if they could do a lot worse than having big exposure to FANG stocks. These are some of the best performing companies and businesses in the world. And so we're not afraid to have a little FANG exposure. Specifically on Amazon, they have obviously the #1 e-commerce business in the world, quite dominant in the U.S., in continental Europe, as well as other international markets like India and the Middle East. And that e-com business is worth about half of the company's mm-hmm. value. The other half has been built up on the cloud computing business with AWS, and we continue to see them being one of the giant leaders in that business. And the fundamentals there, it's growing 30%, margins are higher mm-hmm. than 30%, or at least very close to 30%. They bounce around depending on the quarter. And, we think that's going to continue to be a great leader. So that's why it's one of our largest holdings.
Well, Glenn, a lot of your peers also sold out. We saw through the 13F filings on Friday, a lot of the Tiger Cubs getting out of Netflix, Amazon, Facebook. Why do you think so much of the industry is starting to sour a little bit on some of these big names? Is it a matter of valuation?
It's probably a rebalancing, in terms of looking for companies whose valuations are more stretched and reducing some of those holdings. We've certainly done that in some of our big winners. And then you rotate into companies that, look especially attractive. And so it's a normal course of investing, being a portfolio manager.
Glenn, a lot of your portfolio, more than 40%, is outside of the U.S. Some of that is in China or with Chinese companies. What is your feeling about investing in Chinese firms amid all these tensions between the U.S. and China?
Yeah. Well, I think there's been tension, really increasing tension for the last 10 to 20 years. And there is tension specifically around Chinese companies that list in the U.S. What we're seeing happen is that many Chinese internet firms are now dual listing and having an IPO on the Hong Kong market, and that gives them optionality perhaps to in the future, perhaps they'll only be listed in Hong Kong. And I think these are such incredible businesses. We're long Alibaba, we're long JD, for instance. We're long Tencent. These are great, incredible companies that have real, dominant presence in social media, in e-commerce, in payments. And I don't think that a row between the U.S. and China is really going to change the quality of those businesses in the long term. They have little to no exposure to our end markets here, and we're quite bullish on them.
And Glenn, when it comes to the U.S. companies, obviously there's a lot of election risk around the corner. What's your number one concern about going into this election season, especially with such a big spotlight on big tech?
Sure. I don't think government action in big tech is the largest concern, frankly. It's very hard to argue that these are monopolies using the traditional measures and legal tests. And that's why you've seen really the government do very little other than have CEOs come speak to them and testify in front of Congress. And that's sort of been the extent of it. Maybe they'll try to do something more aggressive if there is a big blue wave. I think that the number one risk probably is a big blue wave coupled with a Biden presidential election. I think that will be a more difficult environment for all businesses, not just tech, to perform in. I think we saw what a recovery looked like under the Obama administration following the global financial crisis. And as we work through the COVID crisis and trying to bring businesses forward, many of whom need to rely on the internet and e-commerce, we're going to need to get out of their way and use as little regulation as possible in order to maneuver in that environment as an economy. And so that's probably a bigger risk than specific tech action on the largest winners.